following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block for our first show here in 2014. Happy New Year to all of our listeners out there. My name is Mark Longo from the OptionsInsider.com, as well as from the Options Insider Radio Network, upon which many of you are listening to this fine program right now. And joining me for our first explosive episode of the new year is a usual cast of characters minus one who's too busy sledding to be bothered with options today. We'll start off beaming in from the great white north, a.k.a. Maine. He is none other than the option lobster himself, good old Andrew Giovinazzi from OptionPit.com. Mr. Lobster, welcome back to the program, sir.
Great to be here. Great to be here. And yes, there is a lot of we have a lot of snow officially. Snow and frozen, cold. You know when you see trucks on the ponds that we're cold. And January 2nd. Frozen wasteland.
And once again, sir, you have continued your trend into the new year of sounding surprised whenever I toss it to you. So it's good to know that old traditions remain in the new year.
You know what? I was trying to think of how not to do that, yet I somehow stumbled upon it and did it anyway.
It's your shtick. It's your thing. If it went away, people wouldn't recognize you on the show.
I guess so.
All right, and also joining us from much closer to home, you know him, you love him as the Viceroy, a.k.a. one Alex Jacobson from Options Express. Alex, welcome back to the show, sir.
Good to be back, Mark, and we are also snowbound and frozen here in the suburbs of Chicago. I think we got about a foot of snow, and we're expecting a little more. So interesting weather. Had to pump natural gas prices a little bit, but good to be back in the new year.
Got to say, we love the shows from Casa Jacobson because the connection there, the microphone, whatever it is, sounding fantastic. No more of that Cylon robot-y voice we get whenever you're beaming in from OXHQ.
Yeah, well, welcome to the OX firewall. If I log in via the firewall from here, it goes exactly wrong. I mean, it's interesting, but thanks. Technology here is good.
Tech is a great thing.
That's
we
what
love
firewalls
it.
do.
Yeah, that's what firewalls do. They block our shows. All right, and with the gang mostly assembled, minus one, we're going to keep on rolling right on into the first trading block of 2014.
The trading block.
All right, and welcome to the Trading Block. This is, of course, the portion of the program where we break down what was trading, what was moving the old markets today. And it's funny, you know, despite the narrative we've been talking about on this show and many other outlets have as well, that not a heck of a lot on the horizon for 2014. And, of course, 2014 A lot of people have been running with the fact that the bull trend is just going to continue because not much on the horizon to derail it, not much vol potentially on the horizon. We didn't see any of that playing out today in today's first session. We saw most of the major indices selling off about 1% or almost a full percentage point here. And, of course, vol ticking up commensurately. So the new year, not exactly off to a resounding start, unless, of course, you're one of the bears out there. So everyone who's been telling us for ages that the bull market's going to keep going, we're in an upward trend, at least for the first session here, not exactly playing out. We'll see if this means anything for the rest of the year. Probably not, but always fun to point out the perception versus reality that we actually see in the marketplace. And Senior Andrew, let's kick it off with you, sir. I know you were talking even as earlier as your prediction, your very bold prediction on our last episode was that VIX was going to tick down into the single digits. So far, at least one session under our belts, we're moving in the other direction.
Oh, yeah. Pretty wrong short term, that's for sure. Well, you can be short term wrong, but long term right. You just can't blow out in the short term. I think that's important. We actually have trades similar to that described, in the strategy letter and stuff we put out for our clients. That was more of a kind of a little funky back spread on volatility. We closed a short put leg today and rolled it into some long call spreads in, let's say, VXX. I really think Bernanke's saying something tomorrow, and it's kind of the standard, the Fed guy speaks, so vol gets bid. Listeners tomorrow, I believe it's 2:30 Eastern time, might be a good opportunity to short some volatility at that time, but we might cover that if Mark's little birdies are telling him something, maybe in the strategy block.
Yes, the purple minions are chattering away aggressively.
But yeah, I mean, the thing is, and just while I'll say one thing about vol before we go on to the Viceroy, the actual volatility move was muted today. I'm looking at volatility in the individual strikes in the SPY, and it was actually, last time I looked, and it was about an hour and a half ago, it was down on the day. I know that sounds crazy with the VIX up, but it actually was down on the day. So I don't really think there was a bid. Now, VIX is up just because it moved down the curve the way they calculate it. VIX should go up. But there wasn't really a bid for volatility. And as I look at it right now, there wasn't. If you look at the change in implied volatility per strike on the terms like from the Jan 10 weeklies out to about the Jan 31, that quarterly, that's not a quarterly, that is a weekly as well. Vol actually at the strike was down. So, VIX can be up and implied volatility on the name strikes can actually go down. So this is not what I would call a sell-off with a lot of put buyers in it. So it was very muted. Vol didn't do much. Skew didn't do much. But we did get a rise in VIX. But you should have seen even a little more than we got if there really was a bid to the volatility, which there wasn't. So it was kind of a wimpy sell-off. I don't know what Alex thinks about it, but that's sort of what I viewed it as. I think a big part of it was, there's some instability now in Turkey. It doesn't take long for some Mideast country. They're trying to kick out that, who is it, the premier there, something or other, crushed the emerging markets today. We're down 3 3/4%. For those scoring at home, that's about a 3 standard deviation daily move, which is fairly big. At the 19 volatility it was this morning before it all exploded. So that's some movement in the emerging markets. 3 3/4% is no small move. So I think that was basically part of it weighing on the markets as well. But that's what we got.
It's interesting. People always assume that skew is this somehow this written in stone thing, and that's depending where the underlying goes. That is where vol will go. Whether the underlying, there goes the vol, and that's not always the case. We've mentioned that on the show many times. Skew is just a best guesstimate of where vol should go, all other things being held constant. But a day like today, even with a relatively aggressive sell-off, nearly 1% in the S&P, guess what? If the put buyers aren't out there, if indeed there are put sellers, if people aren't buying vol at these levels, if they're indeed sellers of vol at these levels, then guess what? Vol is going to come in. As we said many times on this show, order flow is key. Order flow is king. If the order flow is not buying what the skew is selling, then guess what? The vol is going to go where the order flow dictates, not the other way around. So people who get married to these skew charts, and particularly as things get farther away from the at the money, these things are just guesstimates. So bear that in mind, listeners, when you're looking at these things, that nothing is set in stone, and order flow is the master of all. Speaking of the master of all, Mr. Alex, what caught your eye from scenic, lovely Casa Jacobson as you were keeping tabs on the OX doings today?
So because I wasn't on the desk and I was home, I had a chance to catch up with some hedge fund friends, and they attribute today to a unique form of tax selling. Now, let me sort of explain a bit. Of course, tax selling everybody associates with sell, take the loss, and then offset gains, and do that prior to December 31st. Well, I spoke to a friend of mine today at, I think, about a $40 billion hedge fund. And he said, ironically, today the window is open for redemptions. And it's a brief window that stays open. And he said today what they had was people raising money to pay the taxes from the, and this is his term, extraordinary gains they had last year. And watching CNBC and Bloomberg today, both of them seem to echo that they thought this was money being raised to pay taxes. So I think that's a bit ironic, and I think it's in line with what Andrew observed. You didn't see lots of put activity today. You didn't see lots of put buying today. I think today was just a rebalancing of portfolios, and I expect this will be a 1 or 2 or 3 day event. Of course, what happens is whatever happens on the first day, you have all the gurus on TV bring out all the charts and graphs, and then forecasting.
Sorry, I'm not laughing at you, Alex. I'm laughing at the guys bringing out all the charts and graphs.
Yeah.
First day of the year.
Yeah, and that's there was a great quote. A guy that I respect quite a bit, Barry Ritholtz, who spends a lot of time on TV. They asked him a couple days ago for his, forecast going into 2014, and he said, "I don't know. I'm not sure. Let's get a few trading days under our belt. Let's get Janet Yellen into the chair. Let's see what comes out of Washington." So I think today was some kind of tax-related event. You just came off a phenomenal year, and again, back to what Andrew said. You just didn't see any reason for this today. No one was rushing to get out of the door in anything. It just seemed like it was across the board. And a lot of the stuff that had a lot of gains in it, especially a lot of the triple-digit stuff, lost a couple points today. And it seemed like kind of an ordinary event. Would it have been nice, to have the first day of the year be, an up 25 on the S&P day? Yeah. And then the other set of charts and graphs would have come out. So I think today was kind of just an ordinary sell-off, and I don't think there was a lot of news today. And as Andrew said, you didn't see it in vol, and you didn't see it in option volume.
You're right. Whenever you see a big sell-off on a day like today, clearly there's more at work underfoot, and that it clearly has some this is the case of the tail wagging the dog, and taxes from big gains clearly coming to bear in the marketplace. People got to pay that money somewhere, and so it comes out of what they're holding right now. And you're right, the option flow certainly bears that out. There was no panic buying of puts or anything like that. This really was very orderly, taking some cash off the books to pay for last year's big blowout bonanza. Speaking of the big blowout bonanza that was last year, of course, this is our first trading session of 2014. And that means the numbers are out for 2013. And overall, it was a pretty decent year for the options market overall. Overall options volume ended up about 2.7% to 4.1 billion contracts. That is the second best total ever, behind 2011. Obviously, a few hiccups there last year in that number. But the overall premium, which is interesting, overall premium changing hands in the marketplace was $1.2 trillion. So interesting stuff in and of itself. The overall numbers we're looking at here are about, 320.2 million total options contracts for the year. That compares to last December or when we saw about 312 contracts were traded. Of course, that's in December. I should clarify that. 320 million in December, not for the whole year. And total trading for the year was 4.1 billion contracts, an increase, like I said, just over 4 billion roughly last year. Equity options volume, talking 3.7 billion contracts, up about 1.2% from 3.6 or so last year this time. So overall, despite the fact that starting the year, people were very concerned about the flight of retail from the options market and whether or not we're going to be able to get any traction back with that clientele, whether people in general were going to start coming back to the options market overall. And of course, a lot of people putting a lot of stock in the minis to bring those people back. The minis then kind of falling on their face and not really doing that. A lot of people were thinking maybe this wouldn't be the year that we would get some numbers back. And it looks like, at least overall, those numbers were fairly decent. And let's see, open interest for December was about 292 million contracts. That's up about 10% from December of 2012, which was 262 million contracts. So overall, not bad. Would that be your take on the year as well, Alex? Overall, not bad, despite a lot of things perhaps conspiring to derail the year. It seemed like it turned out all right.
Yeah, I think that's spot on. And in the last half of the year, we had some record months at OX. And I think the way the year started, our expectations were not for a good year. And I think coming in flat is terrific. I think the firms and the exchanges still have a lot of work to do in terms of minis and getting retail back to a larger degree. In some ways, some of the volume this year, I mean, this was the year that the world embraced weeklies. So, in a sense, some of what we lost or some of the drop-off was made up in weeklies. So it was okay. But we got our work cut out going into 2014 in terms of getting retail to re-embrace it. We also saw a lot of the macros lead this year, a lot of the macro hedge funds. I know that's not the audience typically of the show, although our mainstream is talking to the individual investor. But we saw a lot of the macros lead this year for a lot of reasons, and macro performance wasn't outstanding this year. Everybody at the end of the year and at the beginning of this year said 2014 is going to be a year for stock pickers. Again, charts and graphs, everybody says that every year. But I happen to agree. I think this is going to be a year of stock pickers. And I think we're going to see a lot of appetite and a lot of traction in the triple-digit names, with people actively trading those and managing those going into 2014.
And, Andrew, I think your point is very valid. We, of course, listeners are always chatting away here off air, commenting on different things. And, Andrew, your point is a good one about div trades. Those are, of course, depending on the year, you're talking about anywhere from 3 to 5, maybe even 6% of the overall volume of the industry at any given year. And that volume is probably going to go the way of the dodo. If all things play out as expected, probably going to go the way of the dodo in 2014. So that'll be interesting to see once that volume goes away, what the numbers are looking like for 2014, because that's a big chunk to suddenly disappear from the overall marketplace.
It is. And but I like Alex's point on the weeklies. I think if individual investors, started looking at that, I mean, our business has, we've grown substantially this year. in terms of, number of clients and things like that. There is probably not a trading day that goes by that we don't have some kind of something in the weekly somewhere, some way, shape, or form somehow. So that will grow, and I'd like to see the volatility products grow as well. Obviously, they haven't caught on as much as the VIX and some of those vol ETPs, but I wish they would do the less stupid, esoteric ones and the more kind of vanilla ones.
So you're saying you want variance to catch on the way VXX and VIX have? Is that what you're saying?
Well,
I think you might be disappointed in that one, sir.
Yeah, I'm just talking about the more kind of, I would like to see an Apple volatility product. I would like to see a Google vol product. I mean, obviously earnings, those things, gosh knows how they would trade. And they're not going to trade unless there's a vol future to go with them. So, you got to take that all with kind of a little grain of salt here and there. But I think volatility in asset class is a growing asset class. It's not going to stop. Even if we choose trade a single digit for, one brief moment, then Alex and I can jump up and down and say, we were right. After the VIX goes to, 43 maybe for a day. But I'd like to see those kind of things because I think those are the products that people are starting to gravitate to. We're getting, again, just our little anecdotal evidence, tons more people on volatility education. And it's a good thing, and I expect the trend to continue.
And to Andrew's point, if you look at the people who now trade structured single stock volatility, the amount of stuff that's traded, the notional, is enormous. Now, there are not a lot of trades, and I think that's why the exchanges have kind of dragged their feet here. I mean, Cboe's had single stock vol, and we use the quote every day in the Idea Hub. It's our driver in the hub. And right now we're limited to Apple, Amazon, Google, Goldman Sachs, and IBM. But the ISE had vol products on the shelf. NASDAQ has vol products on the shelf. Cboe clearly has done real well and should expand the family. It's unclear why they're dragging their feet, other than, as I said, a lot of it gets done, but it isn't a lot of trading. I mean, I've seen structured trades go up in single stock vol of 10, 11 figures notional. I mean, $1 billion notional trades going up in Google and Apple. They're off exchange. And you can do that stuff structured upstairs. And, I've already made it a long conversation, but it's a longer conversation about what are the best interests of the exchanges versus the best interests of the distribution system. But to Andrew's point, we're going into Apple's earnings. Imagine the traction an Apple vol product would have this week. Right now, the only way to play it is back spread straddles, straight out bets. But with a vol product, you'd have a whole other dimension, and liquidity begets liquidity. You got more vol products you can trade than more standardized options you're going to trade, because the clever individual investor, and let me pause for a minute. The self-directed individual investor today is as knowledgeable as the best hedge fund investor, because they've evolved in the 14 years of fully electronic option trading, and they've got great tools today. And to think that institutions are the clever guys and individual investors are not as clever is just fictional. I mean, there's so many good products, there's so many good tools, there's so many good trading platforms, that there are individual investors out there today that are, as good as the best rocket scientists were when Andrew was on the floor and when I worked at the Cboe. And you give them the added dimension of vol products, and, they'll have a whole new trading instrument and a whole new trading style. So I'm not sure why the exchanges are dragging their feet.
I just ran into one of the Cboe product development people recently at a conference, and I gave them a hard time about this exact thing. You'd think with how many different ways they're trying to skin that VIX cat and put out all these new VIX things. For whatever reason, they really seem terrified of listing these single name products. And whenever I put it to them on my shows or even in private, there are always a lot of hemming and hawing and dragging the feet. Well, we'll need a future to go along with that, and we don't know about that, and all these other things they keep throwing up as impediments. But I agree with both of you guys. I think single name VIX is absolutely where the audience would be headed, and they would love to have a single name volatility product on some of these issues. And for all the other, obtuse ways that they're trying to stretch that VIX brand into ways that it maybe doesn't really fit, this is a place where VIX clearly fits, and it really makes sense to have an Apple VIX and GLD or whatever the case may be, whatever underlying single name underlyings you want. Maybe Apple VIX and maybe who knows, whatever other names you want to list in there, Priceline, Google, etc. That would clearly resonate with a large chunk of the audience, and yet for a number of reasons that shall remain a mystery to all of us, they continue to drag their feet. But we won't drag our feet, no, because we're going to keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the program where we break down the hot action in the world of options, particularly the stuff that caught our eye and made us stroke our chins and saying, this looks a little bit odd. We're going to kick off the new year here with what else but a massive block of puts in SPY. Of course, good old SPY closing today as we are recording this January 2nd here of 2014, closing today at 182.92. And yet in the money was where the action was today, and particularly on the put side, going up early in the session. We saw a huge chunk of SPY puts going up today in the early part of the session, in particular the Jan 184 puts. And like I said, with today's action coming off about two handles, these are now in the money puts. They went up for $1.95 earlier in the session, trading 221 now, so that guy's kind of happy. And we saw someone picking up just a ton of them, about 29,000 of these puts. Of course, there's a ton of open interest on SPY and on these at-the-money strikes. There's about 64,000 contracts open there. But what's interesting about this, not just the size, but the fact that it went up in one mega block, lifting the offer nonetheless. So this is someone who really wanted to get in with a lot of size here on good old SPY. Went up marked as a buy right, too, which is interesting in and of itself. Senior Andrew, what do you make of this for our first Odd Block review of the new year?
It was the first big block I saw trade. And for the most part, they were right. But the funny thing, like SPY still tanked after that. I mean, the puts are higher, but not a whole lot higher. So, I mean, they bottom vol came in. It feels like a trade that was kind of a puts in stock trade, kind of a back spread type thing. Again, it's hard to find that block of stock in the ether. But the size, to me, it did go up marked, tied to stock. So I'm assuming it was tied to stock. But it's somebody just thinks the SPY is going to really move out. And as of right now, they were right. Now, of course, it depends how much they hedged and how much they bought, because I think the SPY tanked an extra, it was down 128. It was down another 49 cents or so from there. So, I think the puts held up, but I don't think they quite moved to their delta. Let's see, 220, 25. Okay, they moved to their delta. So, but again, just kind of that first trade, the first big print, and it's somebody wanting to buy juice. So I found that. I thought that was funny.
You should interview them for your forthcoming tome. Of course, he didn't get it for free. He had to pay some money. So maybe you can interview him, then tell him, here's how you could have gotten your juice for free.
Here's how you buy your juice for free. So
just buy my book for $29.95 or $49.95, and you too can buy 30,000 contracts for free.
So he's, but we'll see what happens there as that kind of volume moves. If we get more follow through tomorrow. But if the Viceroy is correct, we might have just a little bit more tax selling tomorrow, and then the sellers are all gone, which feels like it's kind of what's happened to gold. They're all the end of the year sellers. They crushed it down, and then the sellers are gone.
Yeah, they're done again until December 31st if all these other macro predictions hold true for the year.
I guess so. So anyway, we'll see what happens with that. What else do we have on tap?
Oh, we have many things on tap, but we'll keep going with the current stuff before we perhaps dabble into some of the more, shall we say, 2013 type review material. Next up on the old odd block, we have a name a few of you may be familiar with. This is YHOO, Yahoo. I'm not sure how you pronounce that. Some may call it Yahoo. Closing today, $39.59, down nearly $1.85 or so, or about 2% on the day. This is the name that of late's been doing decent volume, about 88,000 contracts a day, but lighting it up today with about 2x that, about 150,000 contracts. Really just lighting up the tape today, and it wouldn't be the odd block. We couldn't kick off the year if we didn't see someone diving into a ton of upside calls. And these are the Jan 41s we saw going up today. 15,000 going up early in the session, 15,610 to be precise, going up for going up for a variety of prices, and a lot more going up towards the end of the session, a total of 25,500 going up on this strike. So a lot of love here on the Jan 41s. These are very close out of the money calls, only about $1.50 or so out of the money. These went up, lifting the offer again. Of course, they do report tied to stock, so that, of course, changes the narrative quite a bit there, listeners. Looks like, I guess, on the surface, looks like perhaps someone taking off a covered call here. Is that your take as well, Senior Lobster?
Yeah, because there was like 4 other strikes that traded, or 3 other strikes with similar type of volume. And it just looked like this giant unwind thing. What did we call it last week? That trade where, with all the commissions and stuff?
That was a love your broker type trade.
The love your broker trade. Where the Viceroy does dances when the order hits the desk. 25,000, 12,000, 20, 17,000 contracts from the 41 strike all the way to the 44, all trade tied to stock. I don't know quite what the heck it was, but it was something. And it did feel like, Yahoo's kind of made this huge move up on the Alibaba sale. I think somebody's just taking just a whole lot of money and saying, thank you very much. That's kind of what that feels like, because all those upside calls have gotten crushed down there pretty good now.
Someone unwinding a mega Christmas tree.
A mega Christmas stupid. Yes.
Yeah, whoever this desk is, they can just go home for the rest of the month because they're done.
I think so.
Doing about 80,000 contracts or near to it in these trades.
$3 a contract, we're done.
I love these guys who can't pick a strike, that is all over the place. I'm going to take the 41s and the 42s and the 43s and the 44s and write them all and then close them all. Maybe there was a little bit of buying in there. We'll have to intersperse and see how it unfolds. Some size open interest on the 40s, 140,000 contracts there. So maybe that's driving the rest of it. We'll see. We'll keep an eye on that. Only 5,000 of the 40s trading today. So still a lot sitting on that Jan 40 strike. But yeah, you're right. All the upside open interest, 41s, 42s, 43s, and 44s essentially looks like it was closing out today, or the lion's share of it. So very interesting stuff.
A very interesting Christmas tree against those calls.
It would be. That's why. With the 40s, that makes maybe a little bit more sense, leaving one leg open, closing out the rest apparently, because he's closing out everything. 40 and above, it's closing. Oh, he bought a one lot of the 45s too, so there you go.
Just for a little extra. I was going to sing a Frank Sinatra song, but set him up, Joe. I got a little story. Not quite Sebastian's 80s references. I can't do it.
Your singing probably is a little bit better than his, though. All right, moving on to we didn't get a chance to do this on our last show, but we always like to mention the names we're keeping an eye on in the odd block. Every once in a while, we'll flag a name and say, that's a good one. We should keep an eye on that one. And then we get a chance to go back to them a little bit later. We didn't get a chance to do that last episode because you guys were running with so many questions. Again, a good problem to have. But we're going to try to squeeze a few in today, starting off with Ziopharm Oncology, ticker symbol ZIOP. If you'll recall, we profiled this back on November 25th, And this was, at the time, we saw someone coming in, the typical odd block trade, someone coming in, gobbling up some upside calls. In this case, it was the Dees 5s, 3,500 of them going up for 13 cents. Looked like someone was betting on a pop that this stock that was trading about 3 3/4 was going to pop in the near term. And that never happened. Looking at the where the stock went since we profiled it, this guy really never even got close. The highest level the stock got prior to expiration in December was $4.10. So those calls pretty much went out worthless, which is why we like to check back in every now and then to see how these flyers are working out. Again, a biotech stock, betting on a pop, and didn't exactly go his way. So yeah, we can write off ZIOP. Didn't see any indication that this guy was rolling. So it looks like he bet his farm on December and then let it go. And then next up we have TWI. This is Titan International Inc. We also profiled this around the same time as the other one, probably late November. I think it might have been the 25th as well. This is TWI closed. Well, at the time we profiled it, it was trading at $17.05. Closing today, $17.75. And what we saw going into it was someone buying up a bunch of the Dees 17 halves for a variety of prices between 30 and 50 cents. Went up in small blocks. It was kind of scattered call buyers at the time, which was kind of interesting. Prior to expiration, these had a chance. The stock hit about 17 in the order, actually exactly where it's trading today. So it hit this back prior to Dees expiration as well. So this guy might have had a chance to scratch him or maybe even roll him so this one wasn't a home run by any means, but at least he might have stayed in the game. And then another one that looks like this guy we profiled back on October 24th. You may remember Jive Software, ticker symbol JAIVE. They closed at the time we profiled them back on October 24th, $12.32. We saw someone coming in again, lifting offers on some calls, buying 5,000 of the NOV 12 halves. So these expired a while ago. That was a lot of call buying. Looked like it was a play on earnings going into their earnings. Unfortunately, this one didn't work out too well for them either. We saw a quick print around earnings time at about 11.69, and that was it. The stock never really looked back prior to expiration, and as of now, it's still trading $10.92. So far, we're pretty much 0 for 3. Maybe have a guy here who had a chance to scratch or get some of his stuff off on the TWI, but that's really about it so far for those ones. Another one falling into that category would be Covanta. This is ticker symbol CVA. We profiled them again on October 24th. Someone coming in buying NOV 20s for a dime. It wasn't big size. It was about 400 or 500 contracts. But again, not all insider paper is 10,000 contracts. Doesn't take a lot of size to know something is going on in this name. So we put this one on our to be watched. This again, CVA was trading about $17.35. But it never approached that NOV 20 strike before expiration. The stock briefly flirted around 18.5 level and then dropped off a cliff again. As of recording this right now, trading at $17.90. So certainly no chance for those NOV 20s to come into play. So yeah, the CVA never really having a chance here either. A lot of these names are looking at, again, one of the reasons why we like to mention buying out of the money call, swinging for the fence is not always the best thing, nor is this always smart money, smart paper that we're profiling here on the show. So keep that in mind when you're doing your own options trading, that not everyone coming in gobbling up a ton of upside calls is privy to some insider information. Of course, that said, there are the exceptions that prove the rule, and what we have here is something we profiled a while ago on the show, actually. This was NYCB. We profiled this back in June 27th, to be precise. We saw shares of New York Community Bancorp. At the time, the stock was trading $14.02. We saw someone coming in loading up on 1,000 of the NYCB OC15s for about 15 cents. It was all opening paper because there's only 600 contracts open on this name. This is a bank holding company and producer of multifamily mortgage loans. Looks like someone was betting on a relatively longer term pop. Remember, this is on June when we profiled this. And it looked like it was pretty good timing overall. The stock rallied almost immediately to about $16. So these 15s were about $1 in the money relatively quickly. And the stock expired around 1582, so they had a lot of time in the interim between June and October to get out of these calls for many multiples of what they paid for them, whether they rolled up or whether they sold them outright. We didn't have time to dive through all the open interest to see all of that in detail, but it looks like they had opportunities to get out of these if they wanted to. So that was one of the few ones we saw that they may have done all right. And the other one, also coming from June, that looked like it might have been a fairly decent scoop on our part, was GDP. This is Goodrich Petroleum Corporation. At the time we profiled them, June 27th as well. We saw someone coming in. The stock was trading around $13 at the time, and someone came in and scooped 6,000 of the AUG 15s for 45 cents. This one worked out pretty well. The stock was around, like I said, 13 at the time, and it pretty much never looked back from those levels. It just kind of kept rallying the whole time since we profiled this trade. Probably, like I said, one of our better scoops of the year. The stock got as high as $24 in that time period, so these 15s were essentially $9 in the money. The stock expired around August at $23.16, so they expired over $8 in the money. So this, anyway you dice it, unless this guy dumped them really, really early, this guy made out pretty well. We looked a little bit of cursory looking at the open interest. Didn't have time to dig through all of it. But didn't look like he sold them out, so he may have ridden them all the way up and actually got the stock. We'll have to confirm that, but interesting one, and one of our better, looks like, scoops of the year. Overall, Andrew, though, the narrative pretty much playing out as we expected, and even in some of these names that we flagged, that loading up on upside calls is not exactly the key to riches, nor is following all these guys and buying more calls the way to print money. Would you concur, sir?
I would concur. If there's any theme, really, it's you've got to give yourself a lot more time if you're going to buy out of the money calls. Time is your friend if you buy them in let's say 3 to 6 months out. If you do it short term, you're pushing up a rope on that stuff. Very difficult.
I guess we'll finish off with one more here. One more. This was something we profiled here October 3rd. This is YPF. This is an ADR. I'm not sure what these guys do, what they're an ADR for, but YPF is a ticker symbol. When we profiled them back on October 3rd, stock was trading $20.47. We saw someone coming in, loading up on the Jan 2014 25 calls, so substantially out of the money calls. We saw a bunch of them going up nearly 1,000 times. It went up in one big block, lifting offers on multiple exchanges. Picked them up for about 50 cents. And this is another one where this name pretty much just was off to the races right after this scoop. This guy obviously was clued in on something. The stock took off, and it's trading today about $32. And those calls are still open, or at the time we open, they're still open. And they're trading about $8. So not a bad 1,600% or so return on his investment. Sizable open interest still on that strike, so you may still have them open. But either way, a pretty good scoop there. So a couple of winners amongst the sea of duds, Senior Andrew.
Yep. I think that at YPF, that was very interesting on Argentina, playing Argentina, kind of buying the bottom and all that stuff. And I can't remember if YPF actually got a settlement from the government because some of their assets were taken away or something on this, but clearly this guy kicked some serious behind on this trade. It was a good one.
So they're fun to parse, they're fun to analyze, but as we often say on this show, size money doesn't mean smart money, and just because they're buying upside calls doesn't mean they know something. And clearly, looking at the track record of a lot of the names we're profiling, they clearly do not. But a few of them every now and then, they know a little bit of something, and it works out all right. All right, and speaking of working out all right, we're going to keep on working right past the express block and right on into the strategy block.
The strategy block.
All right, and welcome to the strategy block. This is usually the portion of the show where Uncle Mike comes on down from on high stone tablets and smoking jackets in hand, but of course he is busy sledding and doing all that fun Christmassy / holiday type stuff, so we have to make do. And thankfully, Senior Andrew volunteered to jump into the fray and outline some intriguing strategies for you guys today. Senior Andrew, as we've discussed on many times on the show in the past, my birdies are no longer reliable, so I have switched to the purple minions. They are also somewhat dubious on occasion, but they are whispering in my ear what I can make out between their moaning for jams and jellies, that they think you're going to be talking about some vol structuring and vol strategies ahead of Mr. Bernanke. Is that indeed the case, sir?
That is indeed the case.
Wow,
so
I guess they earned their jam for today.
They did. Plus those guys eat a lot, those purple minions. That's like more than a horse.
Yeah, my jam and jelly budget has skyrocketed since they came on the team.
You have no money left to feed your children if you feed them. So a fairly reliable trade has been the volatility trade into pretty much any time a Fed guy says anything. That being really Bernanke, FOMC meeting, maybe even non-farm payroll, where, we've had over at least 2013, I think the trend is going to die somewhat, but it's still noteworthy as long as we're in the era of taper, is that the volatility gets bid, and I'm like to say like the VIX, at the money or market implied volatility in general gets bid going into these announcements because they've generated moves of like 1% to 2% following whatever Bernanke says. I'm going to taper. I'm not going to taper. I'm going to do this. I'm going to get a haircut. Whatever he says, right? And for people that like to sell butterflies and iron condors and things like that, and you put them on and you look at your P&L and you go, "This sucks. I'm losing money every day. Why is this happening? I'm supposed to be making money from my decay." And they're not. And the reason is because their timing is poor around these events. The market doesn't do much, put the trade on, and VIX goes from 13 to 16. While you have your iron butterfly on, or you're like an iron condor, you don't make any money. And then you get all real bitter and frustrated. And then Bernanke says something and the volatility comes in, but then the market rallies a bunch and it might hurt your iron condor. So, there's a couple ways that you can go about trading these, especially if you want to have some of the short premium. One is you wait to put it on the day of the announcement, which means you have to do your homework and be patient. If you follow some volatility patterns, they pretty reliably have been bid up until the announcement. So wait for your iron condor. Also go into a delta neutral. That way, if there's a reliable trend right after the announcement, or either everybody hates it and you make sure you're not too long delta, or everybody loves it and you want to make sure you're not too short delta, maybe hedging with call spreads or something against the position, so you don't ever get really short, but you let the volatility come in. And it's been I think a reliable trade for 2013. It will be a semi-reliable trade for 2014, just because in iron condor, remember, it lasts much longer than a day. But it does help if your timing's a little bit better to put them on. So holding them through these announcements or putting them on maybe a week before these announcements, what you do is you basically put a position on and you don't collect any decay, which is really annoying when you sell options. Or what you could do is you could look at the volatility products, like the VXX or VIX, depending. There's lots of it's too much of a strategy to go into now. It's not what we do at Option Pit every day. But the idea is volatility is like, volatility is an asset class. It goes up and down. It usually goes bid into announcements, just like an FOMC announcement. And on the day of the announcement, an hour before it comes out, you buy an at-the-money put, maybe in a VXX or UVXY. And for protection, you buy kind of an out-of-the-money call spread just in case they say something that surprises everybody and we have the end of the world. And you basically set up kind of what I'll call a funky strangle and just let the volatility melt or explode. And you have to have the patience to sit and wait, right? If you're not used to watching how volatility trades, you have to have the position to wait 2 or 3 days to really let the vol trend play out. Now, is that a more speculative trade? It's not quite the smoking jacket and pipe type trade for Mr. Tusaw, but it's also a nice way if you do have a protected portfolio. Let's say if you have puts against some stock and you want to generate a little extra jing, you have a long put in stock position, which is kind of a back spread. Then it allows you to trade some VXX and sell volatility in the near term, but keep your protection in the long term. It's a little trick we like to use. It's kind of, again, funky time spread, using the opportunity the market gives you to put on, a trade that might make sense for that day. And that is my FOMC. Full disclosure, will have something similar very soon, going into whatever Bernanke, I believe, is saying something tomorrow or the next day around 2:30. So we've started putting that guy on.
Look at you infecting Uncle Mike's strategy block with talk of VXX and volatility. If he were dead, he'd be rolling over in his grave right now, sir, with such speculative volatility type product trading. Crazy talk.
His hand would be coming out of the dirt to pull me down.
But it's funny. What you're mentioning is actually somewhat similar to what a listener wrote in with recently on the show, asking how to take, some of his vol profits off the table. He was doing diagonals in that case and looking to write VXX perhaps against it. Actually, I think he was looking to buy VXX puts, if I recall. But yours is a little bit of a different take on that similar type idea. But yeah, interesting one nonetheless. Thank you for that, Senior Andrew. I hope Uncle Mike isn't too disturbed when he hears this.
I swear, I think I've heard the scream from, where's that place he lives at?
Right now, St. Charles, yes.
St. Charles.
He's grabbing his head on the sledding hill and just collapsing in agony and screaming, why, dear God, why?
No.
All right. And that is going to do it for the old strategy block. And now we're going to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, listeners, those car horns mean that it is time for our final segment Around the Block. This is where we usually outline what we're watching, what we're keeping an eye on for the next few sessions. I think you can pretty much take a guess, given what we just talked about in the strategy block and the general lack of other activity in the marketplace. Pretty much what we're keeping an eye on. We may have to retitle this segment or maybe even bump it from some shows going forward for a little bit, just because there ain't a whole heck of a lot to be watching around the block these days. But Senior Andrew, we'll start with you. I'm going to guess maybe has a little bit something to do with Mr. B tomorrow that you're keeping an eye on.
Yep, little volatility. Again, we found that the vol has been up strangely as the markets rallied. Mark will be writing a blog today for you to view probably tomorrow on that subject. Never like it when the market rallies and volatility rallies. It gives me the queasy weird feeling. But that's what we've had, and today we had a little sell-off, which is why we had the muted reaction. So I think it's all based on or whatever the next Bernanke saying. I think it'll probably be a big – I can't imagine him saying too much to sort of upset the path for Yellen. I'm assuming that he wants her to be able to chart her own course, whatever that is. And, that's really the big thing. I like to see if this Turkish emerging market thing gets more interesting. Because I think it could be a scoop du jour at some point. And, oil fell apart, always interesting if we start exporting. So interesting things going on in that area. But I'm looking at more individual names. I think, like Alex said, this could be the year of the individual name. And, that's what I'm keeping my eyes focused on.
Yes, the year that put the monkey out to pasture, time to beat the monkey, picking your own individual names. Mr. Alex, what's catching your eye for the rest of this week, sir?
Rest of this week, the weather. I know the show won't go up until tomorrow, which is Friday. But the East Coast is getting slammed. So I think we're going to have a real thin market. The week after we start earnings again, Alcoa on the 9th. Alcoa always kicks off the earnings season. That's the singing clock in the background. But next week, I think we get back to a more normal pace. People will be back from the holidays. The desks will be fully staffed. Tax friction and events will be over. So we get into earnings, and then we'll look at fundamentals. We'll see what comes, as Andrew pointed out, what comes from the Fed, and if they're getting their stuff together in Washington, which none of us expect. But Alcoa on the 9th, that's the kickoff.
Nice to have something to look forward to a little bit, but I don't think anyone's really expecting a whole heck of a lot. Of course, we're in a little bit different position than we were going into the last earnings cycle. Last earnings cycle, vol was a little bit higher, and premium buyers pretty much got run over across the board unless you were, the handful of names like Google and a few others that really outperformed their straddles. Most other cases, premium buyers really got it on the chin in the last quarter. Hopefully, maybe vol's a little bit lower going into this cycle. It might make things a little bit easier to scoop. Maybe have a few extra opportunities to do some stuff before the actual event. And then, if you follow our advice, we said many times on the show, you get rid of that vol before the event itself, and you had some nice free week or two to do some stuff. And hopefully at a cheaper level than you did last year. And maybe, who knows, maybe this time premium buying can actually work in your favor. But interesting stuff to watch. We'll keep you posted, listeners, as the earnings season unfolds, because that's really pretty much all we got to look forward to for the next couple of months, at least until the big governmental debates begin again. All right, that's going to do it for the old Around the Block segment. But before we go, let me check in really quickly with each of my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Starting off with you, Mr. Alex. What's cooking on the new schedule for OX here in 2014?
The full schedule of webinars beginning next week, Tuesday, kicking it off with a platform tour showcasing some of the new features. Then Jim Wyckoff, the well-known futures analyst, will do his monthly work on the futures market. Tuesday after the close, I'm doing an idea hub, so we'll showcase that. Wednesday, for those people who may not be futures savvy yet, we're going to do an intro into futures and to how to use the platform. And then Thursday, we're going to do the walk limit. And I know we've talked a lot about that on the show. I know a couple of the competitors, our competitors in the brokerage space have been trying to develop a similar product. Walk limit, if you're not familiar with it, does exactly what a savvy trader would do. It works the order for you. And live events will begin at the end of January and into February. We'll talk about those as the dates go up.
All right. And thank you for that, Alex. And Senior Andrew, what is cooking in the land of the pit?
A couple things. Mark is doing a webinar on the 7th of January, Trading Butterflies, very popular webinar, put out by some sort of competing website, Trader Planet. And we are doing a bear market trading strategy webinar on the 25th of January on a Saturday. We like that Saturday thing. So Mark and I will be doing each about an hour and 15 minutes a person. Actually stuff you can go out and use. So as hopefully with our webinars, you should always walk out of there with things you've learned that are new, that are actually useful. For Option Pit clients, you will get it for a song. If you are not an Option Pit client, you should be. Shame on you, and we will charge you for this webinar. But I guarantee you it will save you much more than if the webinar will cost. Since that is basically what we hear from our clients. Again, tooting my own horn. But that's what I'm supposed to do on this
Yes, a little bit of teases. You're learning. A couple more years, you'll get this under your belt.
3-4 more years.
On the 2016 January show or so, you might have a handle on this thing.
Yeah, SPX will be trading 2,200, and we'll be like, what? Where were those old prices?
You'll be doing teases. You won't be surprised when I toss it to you. It'll be all kinds. You'll be old radio hat by that point.
I'll feel like I'll finally have a voice made for radio.
All right. Thank you for that, Senior Andrew. And even though he couldn't make it today, of course, check out the boys over there at RCM Asset Management. See what they have cooking coming up on the old RCM webinar train. And if you'd like to make your voice heard on the old program, a lot of great ways for you guys to do that. Of course, hit us up on Facebook, facebook.com/TheOptionsInsider. Find us on Twitter, twitter.com/options. Or, of course, find us on the old website. Hopefully all you guys are surfing over to the website. I know a lot of you are. Check out the show notes there. You can post comments on those or pretty much anywhere else on the site. We'll find them. We'll route them to the right show. And, of course, a lot of you guys still love the old email. So you can send those questions into questions@theoptionsinsider.com. Just be sure to put question for the option block in the subject line so we know how to route your question to the appropriate show. And on behalf of Alex and Andrew and of Uncle Mike and, of course, myself, I want to thank all you guys in the listening audience for, again, propelling Option Block to such great heights in 2013. Looking forward to a lot more here for 2014. So stay tuned, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.